right, so let's go over the final. Okay, it should be pretty easy. I already gave you the blue book, and there's only 3 problems on it, and it's take home. Is that a problem for you?
No.
No.
Oh wait, yeah, take home is when we don't have to come to class, or what is that?
Please don't go there.
I'm so sorry.
You don't.
Oh.
Yes, you have to come to class on the final day because you have to eat cheesecake for the first 30 minutes. And for an hour, you have to listen to me lecture for an hour on the exit lecture, which is a 7-module system, the system that I designed over the last 15 years. That will give you the intellectual infrastructure that you'll need to move forward decisively in your academic and professional careers.
Thank you.
You're welcome. And then we'll get out of there a half hour early. Okay, and when is the final?
Can we still title this bullet notes, final notes?
No, it should be final exam.
Okay.
Is it Monday, December 9th?
Yeah.
What day is that?
Monday, December 9th at 3:30 to 5:30.
Monday, December. Oh, that's awesome. Isn't it?
Yep.
Yeah, totally.
3:30 to 5:30.
2:30 to 5:30.
3:30.
Huh?
3:30.
3:30 to 5:30. Okay, awesome. And then on, I think it's Wednesday, 2 to 4, I usually throw a little cocktail party at the Metro. We usually eat beer and drink burger for a couple hours.
Where's this at?
It's in the parking lot in Lafayette across from the Whole Foods.
Metro?
Yeah, I've been doing it
Oh,
for
yeah,
4 years. Yeah, it's pretty fun, actually.
And when is it? Wednesday?
It's going to be Wednesday, finals between 2 and 4.
What time? It's okay.
Between 2 and 4.
Yeah. I'm 30.
I'm
going on
23.
50.
Okay, what we're going to do is,
The Metro thing?
I'm going to change our plans a little bit. And what we're going to do for the report is we're going to do Goldman Sachs. Sorry, we're going to do JP Morgan instead of Goldman Sachs. Okay? Do you guys remember who your teammates are?
No.
They're no one's here.
Oh wait.
And they're
Shit, I'm so
Yeah.
sorry.
They're not here.
I don't know.
Yeah, she joined.
I think classes are optional here at St. Mary's, aren't they?
No.
We
No.
know.
Thank you.
And you're going to need to focus on this because if you're going to be at the CFA challenge, this is the stuff that you're going to be doing. How many people are marketing majors? How many people are finance majors? Okay. No, I gave you that for a reason, Max. How many people are finance majors? Okay, how many people are marketing majors? Okay, and what do you, the other ones, entrepreneurship or global business, stuff like that? Okay. If somebody offered you a job for $125,000 to go work at Schwab, would you say no? If somebody offered you a job for $125,000 at Salesforce, would you say no?
Oh no.
No? In the marketing or finance department? Oh, no, I don't want to do the finance because I'm a marketing major. That's like the craziest thing I've ever heard.
Yeah.
Oh, I don't want to do marketing because I'm a finance major. They're offering you a $125,000 a year job. So what's your answer?
Yes.
Hell
Yes.
yes.
Do you care?
No.
No. Exactly.
I speak
That's my point.
the
I was a finance and econ major. I went into marketing at Charles Schwab and built product and then marketed at the institutional level. Oh, I don't want to do that because I'm a finance econ major. Really? No.
No way.
No. No way. Okay. No way. All right. That's just kind of just a little point of ludicrousy. That's some of the stuff that I hear. So here's the product that you're going to be producing. It's a pitch book. Does everybody know what a pitch book is? Yeah. It's a pitch book. You basically, what do you use pitch books for?
It's a pitch.
Yeah, what?
Product.
Everything, right? Auditing work in front of a major audit client,
Decisions.
private equity deals that you've underwritten that you're trying to buy. marketing, products, advertising, campaigns, evaluations, portfolio research, IT projects, processes, project management, program management. Use the pitch book. Okay, you guys all should be passing around the pitch books, so you have multiple pitch books that you can use as basically models. And I think there's some pitch books posted up on the course website that you can use as a template. They're not as good as the final product will be, but it's a good starting point. Okay, so you may want to take some notes, on, because I'm starting the project today. Okay, and I get complaints every single semester that I don't give you guys enough time to do the project, so I decided to do it a month in advance this time, or basically 3 weeks in advance, not counting Thanksgiving. And I will go over everything. So that's all you have to do is basically put the numbers in and produce the book at a very high quality, understand the materials that you've learned already so far, and be able to tell somebody that asks you when you hand this to them for an opportunity as a job or an internship that you totally understand the analysis that was done, you know how to put together pitch books. Okay? So where did you do pitch books? In your other classes?
Different parts of them in other classes.
Yeah,
Not
okay,
like
but you
all
never
of it
put them,
together.
okay. This is like graduate level stuff, okay? So you do a lot of these pitch books when you're in grad school. Case studies, that kind of stuff. And there's a specific way to do these things, and I'll make sure you do them the right way. And if you do them the right way, they'll be really nice products that you'll be able to show potential employers that will be perfect, right? You can't have formatting issues, you can't have, grammatical, you can't have spelling, you can't have, mistakes in these things. Because what if they find a mistake in it? What if they find a mistake in it?
You lose your credibility.
Yeah, they're gonna think that it's riddled with mistakes, especially the analysis. Okay, so here's the way it is. So it's a plastic cover sheet on the front. The print shop has the materials for this, so you wanna work with them. Okay, don't go off-site to produce this, you wanna do it on-site. And so it's a clear cover, okay, not a opaque cover, it's a clear cover, okay?
Where's the print shop?
It's underneath the power plant, which is where the graduate business school is,
Okay.
right across from Galileo, okay, on the backside. That's all you gotta do is go down there with your flash drive and say, I wanna produce, and I'll call them up, make sure they have enough material, so that once I sign off on your pitch book, you go print it out in color, and then they'll bind it for you. And then you have to ask yourself, is the product good enough to make 3 copies for each of my teammates? And I highly recommend that you print out, once I approve the memos, you print those out in colors and bring extra copies to all of your interviews. And you bring a copy of this to all of your interviews, okay? And you bring an extra copy and you give it to them, and they'll love you, right? Because you're giving them stuff. Once you give somebody something, they owe you, right? So it's an obligation. And that's why you're always trying to give out your business cards with people, okay? It's psychological, okay? So you need to have a clear cover. Now here you gotta use this black plastic wire, plastic covered wiring, okay? Just like this. Don't use the other plastic stuff because it's not very good material. This is exactly the way it's supposed to look like. And then you're gonna have the black cover, okay? So that's basically the production. And you should designate within your group a marketing manager that will make sure the production of the actual physical product is beautiful and perfect. And then you have a financial analyst, that's gonna do the financial stuff, and you have a project manager, who's basically gonna make sure that everybody does their job on time and that, the content is good and that there's no errors, so that when you do the presentation in front of me and I'm writing down notes on it, that you go back and you correct it. And then you bring me back the pitch book until I say this is perfect, go to the print shop and print it. Just like the same thing we do with the memos, okay? And that's really the demarcation. For me, in regards to an A in this class, I get students that get all mad at me because they do all the extra credit and they work really hard, and then they totally blow off the memos and they blow off the pitch book. And that's really the key, right? At the end of the day, is can you produce quality product, okay? So let's go through what these pitch books are, all right? So they're valuations. And we're gonna do, you need to write this down because we're not gonna do Goldman Sachs. As I put in the syllabus, we're gonna do JP Morgan. Okay? And who is JP Morgan? Yeah, who's JP Morgan, Chase? Bank? Is it any bank? Yeah, it's really big. What, like a couple $1 trillion in assets? It's one of the top 5 banks in the world, in the United States. The top 5 banks in the United States control over 50% of the assets in the banking system. So these are the top companies. You think Salesforce and Cisco and all those, companies are top in their field. Well, these are the top in the banking field. Okay. So I only pick the top companies when we're doing these things. So right off the bat, it's the Goldman Sachs or JP Morgan valuation. You have your recommendation right there. You got the intrinsic value and you got the current stock price right there. So very quickly, I can see if the stock price is higher or lower than the intrinsic value, which means that it's going to trade at either a premium or a discount over the next 12 months based on your research. Okay? And this is really geared towards if you were an equity analyst in a investment firm, or you were a portfolio manager, or maybe you were an investment banker, where you did the analysis and you were making a recommendation. You got to do the valuation work before you can do the. And then you got the team. I don't want any St. Mary's stuff on this, okay? Because when they see this, I want them to think that you worked for an investment firm, okay? And that you were going through a graduate program, okay? And then the second page is the overview, okay, which is basically going to be your presentation. How long is the presentation that you're going to be doing? What? How long is the presentation? How long is your pitch? When you make these presentations, how long are they? Marketing majors, come on. What's the optimal amount of time to do a presentation where you don't lose the interest of the audience base because they all have ADD?
5 to 10.
Exactly, 5 to 10 with an optimal day. Okay. If you go past 8 into 10, it means you didn't prepare your presentation and you're reading from the slides. Okay. All right. So background, leadership, culture, value, business segment, SWOT, financial standings, financial valuation, and recommendation. They may be a little bit different for yours, but I think everybody has most of the content that they need. Here's a little background on the firm, high level. Then you got the leadership. Okay, this is really critical right here. Does everybody have 6 people that have really nice pictures of them photoshopped and cropped? Right? No Gumbies, no weird looking alien people, on the page. Right? Okay? And then it gives the name, it gives their title, the number of years they were at the firm, and where they graduated from. When you look at Goldman Sachs and JP Morgan, where do you think they went to college?
Harvard.
Exactly. Harvard, MIT, Wharton, NYU. So it gives you the number of, so that's actually a pretty good one right there.
So we don't need this.
Huh?
We only need 6.
Yeah, did they put more than
They
that?
have like 12.
Yeah, that's too many. And don't do divisional heads. Don't do boards of directors. Boards of directors don't do anything but rubber stamp what the CEO says. So you actually have to find the divisional lines. Okay, who's running investment banking, fixed income, equities, trading, consulting, maybe fintech, maybe a division now. Some culture and values. Do you have kind of an indication of the culture and the values depending on who the leadership is? Yeah, those 6 people that were in there, what do you notice about those people? Yeah, they're all white. Okay. And a lot of them are all men, right? Yeah. Okay. Hopefully that'll change tomorrow. And then you have culture and values. Big business segments. This is a nice, I might have to pass this one around. This is a really nice presentation. They even did it in color. I thought that was kind of cool. Right? So they have the different business segments, and then they have the percentage of the contribution to the revenue in those segments. This is actually a really good communication piece right there. That's a nice slide. Really easy. easy to see where the revenues come from. Then you have the SWOT analysis. I probably would have put the SWOT analysis up further towards the beginning. But that's how your SWOT analysis should look. What's SWOT analysis?
Weaknesses, opportunities, threats.
Exactly. So actually what this exercise that we're doing here is really a mid-program capstone. Do you know what a capstone is? Yeah, it's the last course that you take in the last semester of your program. That's basically what this is, this exercise that we're doing here.
So you'd rather have the SWOT analysis after the leadership positions?
Yeah, I'd probably want to have it further back. I probably would have done, I wouldn't have done leadership first. I probably would have done company background first. And then I would have done culture and values next. Then I would have done SWOT analysis. And then I would have done leadership. And then I would start getting into the business segments and the product segments, the product types, right? Business segments first, and then product types next. Okay? And let's see if they did that. No. After the business segments, I would have a page, and you might have a page in some of yours, where it basically lists the products and services that the company produces. And then what we do is we put stars, 3 stars, 2 stars, 1 stars, next to the products and services that generate not only the majority of the revenue, but the fastest growth in revenue, right? Isn't that what it's about at the end of the day? What are the products and services within the business segments that make up the majority of the revenues and are growing the fastest? Isn't that how you do it, right? Successful businesses. So you want to know it, and actually the business segments, and I actually like to see organizational structure in some of these where you have the business lines with the revenue contributions underneath it, so I can see the divisional lines, and then from the divisional lines you have the products and services with the stars and the asterisks next to them. So very quickly I can see from the business segments and the organizational structure and the product lines very quickly what the comparative advantages and disadvantages that firm has over the peer group. Okay. You took organizational behavior, didn't you, or management? So the problem with the with business programs is you take all of these classes and you think they're isolated, where actually they're a consortium of courses that are overlapping, that when looked at, you know, as a body of knowledge, they all start to make sense. Instead of looking at each class individually, you look at them as basically augmented knowledge that then gives you a solid body of knowledge to then be able to rely on that knowledge when you're confronted with a problem or a situation that you need to analyze, collect the data very quickly, and then based off of your knowledge of the content and what you learned, to be able to make decisive decisions very quickly and know that the decision that you're making is correct. Isn't that what it's all about? Right? Using what you've learned, knowing this is the direction that we need to go. Let's collect the data, let's do the analysis, and from the research we'll be able to know exactly what policy we need to implement and then be decisive about the policy execution and to be able to see that the outcomes from your decisions were correct. And if you can do that over and over again, you're going to be like a multimillionaire, you know, a leader in whatever, your company or somebody else's company. And the ability to be able to do that over and over again, because once you've learned how to do it once, you learn how to do it over and over and over again, and it gets easier and easier and more fun in doing it. Because it doesn't matter, tech, finance, product management, process management, it doesn't matter, the approach is always the same. Then you have the financial standings, which are basically the banks, and the peer group. Okay, so this is the peer group, and it's ranked by total assets. Okay, and there's 5 of the top banks. Since we're doing JP Morgan's the biggest. Next to B of I, then Wells Fargo, Citigroup. It really is a U.S. bank, but I threw in Goldman Sachs instead because US Bank's kind of a super regional as opposed to a super global competitor. And Goldman Sachs is extremely aggressive in not only manipulating politicians' policy and politics, but also they over-leverage their firm to juice the return on equity, and they're extremely aggressive in their product development and their execution. There's really nobody else that's as aggressive as they are.
You talked about product types. What would be like an example of a product type?
Investment banking, investment management, mortgage lending, commercial banking, business banking, personal banking, credit cards. You know, like Goldman Sachs is known for its trading, investment management. It went into mortgage lending and private equity and public equity on the real estate side after the financial crisis. They're now starting to open up commercial bank branches, which they've never done before. And they're actually starting to get into credit cards and fintech, where JP Morgan, B of A have always done that stuff. Wells Fargo always had a comparative advantage in mortgage. Citigroup always had a comparative advantage in business lending and business banking. And Goldman Sachs was basically a boutique investment bank until they basically went from an investment bank to a commercial bank after the financial crisis, because they could get basically free money from the Federal Reserve. So why would you be an investment bank and pay those high costs of capital when you could become a commercial bank and get money for free through the Federal Reserve? You would. You move over in a second. And then the financial condition and position of the firm. So you accountants and finance majors, this is like one of your favorite areas where you're going to basically take key financial ratios and compare them to the direct competitor in the peer group in the industry, and then conduct financial ratio analysis to see if the firm's financial ratios are outperforming the direct competitor, the peer group in the industry. If the target firm or the subject firm significantly outperforms the direct competitor to the peer group in the industry, you're going to give it an excellent code. Not totally awesome, completely rad, you know, you're going to give it an excellent. Okay? And if it's above the peer group or at the peer group, you're going to give it a good. Okay? And if it's basically slightly above the industry, you're going to give it above average. If it's at the industry, you're going to give it an average. If it's below the industry, you're going to give it a below average. And if it's really below the industry, it's going to be poor. Okay? So those are basically the codes. Okay? And then what you're going to do, here's the financial ratios. You're going to do 2 pages of financial ratios to get a large enough sample of financial ratios to then give an overall financial condition and position at the bottom here, okay? And I'm not really sure why Goldman Sachs got below average, because it's one of the top 5 banks within the peer group. So maybe they didn't do it correctly, okay? We'll go through them together and then do the coding. And then what you do is you look at the ROA, the ROE, the net profit, the debt to equity, and then you give it, you know, basically either excellent, good, above average, average, below average, or poor. In most cases for these banks, these top 5 banks, their financial condition is probably good, okay? Because we're not in a recession or a financial crisis, right? Where their balance sheet and income statements would be impaired, okay? Or their market's disrupted. So this is the first overall financial condition and position. Then you do the second sheet. In this one, we were looking at PE ratio, dividend payouts, revenue growth on average over a 3-year period, operating income growth, net income growth, and earnings per share growth rates. Okay, so they may be a little different depending on the example that you're looking at, but at least you have a good sampling here. And Sarah Vitale, I think, was going to come. Oh my God, it's Sarah! Oh my God, she's here, which is exactly what we wanted. I know, you're awesome. So I'm just finishing up here, so if you want to load up your presentation, you can do that. So after you do the financial condition and position, which is the first fundamental securities analysis. First stage of the fundamental securities analysis is to do the financial ratio analysis. So that's your first step in conducting fundamental securities analysis. Okay, then the next after that is your technical analysis, okay, which is the first of your stock valuation techniques. Okay, and the technical securities analysis, we already know how to do that because we have that on the exam, right? Well, basically, you have a 3-year chart, and you basically identify to see if there's any trends or if it's in a trading range or if there's a support or resistance or whatever. And then what you do is you basically forecast where you think the stock price is going to be at this point next year. And if it's above, where it is today, you're going to calculate the premium. If you think it's going to be flat next year, then you put in a 0. And if you think it's going to be lower, you put in a discount. Okay? And then off to the side here, which they had here, is you're going to give us an overall trend, and then you're going to give us some analysis, of trading volume, RSI, and MACD, okay, with some bullets over here. So this is your technical analysis.
Do you usually have this done in the students do it in Word, or they do it as like a PowerPoint?
They do it in the PowerPoint.
Okay.
And I have some examples of that up on the course website. Okay. And then you get into your first, valuation, which is the intrinsic value. You've already, what I'll do is, over the next couple nights or how many, days I can get through it, I'm going to show you how to calculate the discount rates. We already know how to calculate a discount rate using the weighted average cost of capital. We know how to use the CAPM to get the cost of the equity, and the expected return on the market over the last 20 years is another good approximation of expected returns to use for discount rates. So then we set the discount rate sensitivity here. We're going to make a projection what the earnings per share is, and we want to use earnings per share for 2020 because 19 is basically over. So we're going to do forward-looking 2020. So you're going to get your 2019, 20, and 21. So I got 1 year of history, I got this year's estimated earnings per share, and I got next year's earnings per share forecast that we're going to use to divide by the discount rates to get the valuations. And then we're going to go from high to low. So the discount rates are going to go from low to high, and the stock values are going to go from high to low. Okay, and this is actually a good one. And then you have a little table right here that basically lays out the assumptions that you use to calculate the return on the equity or one of your discount rates using CAPM. Okay. So we're basically using everything that you've learned so far. Then you're going to do the Gordon growth model. Same CAPM table, same basically earnings per share forecast table, and then here you're going to have the discount rates and the expected constant growth rates at the top, and then you're going to calculate the valuations in here. This is your intrinsic valuation sensitivity table, a matrix, using the Gordon growth model. Okay, and then you're going to pick a scenario as your intrinsic value. And then up here, here's the intrinsic value. There's the stock price and your calculated discount or premium. Okay. Then you got the multiple approach, where you have the 5 peer groups. You got last year's PE multiple, this year's projected PE multiple, and next year's forecast multiple. From these multiples, along with some other multiples that I'll calculate here, you'll come up with a multiple scenarios or sensitivities, multiple sensitivities from high to low, stock values from high to low, high to low. You're going to pick the middle scenario, plop it there, compare it to the stock price, and calculate the premium at the discount. Boom. Does this all sound familiar? Yeah. And then the other one is you're going to do the DCF. Here you're going to calculate the weighted average cost of capital. You're going to have your sensitivities here. Here is your 5-year projections with your terminal value, discounted cash flow for the total, discounted cash flow for the total cash that you received in the last year of the holding period. These are all your discounted cash flows that you can add it up. There's your intrinsic value that matches to here, matches to there, and you can calculate the premium and discount. And it shows you the EPS along with the EPS growth rate assumptions. Okay, very simple chart, right? Less is more. Then what you're going to do is you're going to do 3 weighting scenarios. Sound familiar from the exam? Then you're going to pick the weighting scenario in the middle, which you're going to use for your final intrinsic value. You're going to calculate the weighted prices down here. And if the stock price is below the current stock price, it's going to be a sell. If it's above, it's a buy. Right here, you got the final intrinsic value next to the current stock price with your premium, your discount right there. And your next slide is going to be your recommendation. The intrinsic values, current stock price, premium or discount, total number of trades on the index, ETF, and the stock, so total trades. And then back here, you're going to have your references. And I would use all of these references. Even though you may not have used them, you should use them. Sarah's going to show you all the references that you're going to want to use. And then what we should have back here on this slide that I'm doing now is I'm having each of you put your name underneath a line. You have to designate, who's going to be the portfolio manager and the senior equity analyst with a date next to it, signed. You have to sign it. So if you're a chartered financial analyst and you have a CFA designation and you were doing one of these reports, you'd have to sign and date it. Basically stating that you, to your best of your ability, collected all the data and did the analysis within the time period available to you to come up with your final research recommendation for investment purposes. Okay?
Would you want us to use Wikipedia or no?
For what?
I don't know, some of the references.
I would use Investopedia as opposed to Wikipedia. But somebody might have looked up Goldman Sachs or the companies just to get a quick read on who the companies are. So when you're doing your presentations, you can add in, you're not just reading from the slides and every number on every slide, which means you didn't prepare whatsoever. But you're basically walking through and talking to us about, not only the research you did, but maybe some of the subtleties or nuances, from the research that basically helped you to form your growth rate projections and your multiple, assumptions. Okay, any questions on this? Okay, so Sarah is totally awesome. She's going to help us. We're doing JP Morgan, but we're going to need to pull some data for the peer group. So what we're going to need, you guys need to write this down because at some point, probably, on Wednesday when we get back, you're going to bring the data to class so that we can pump through the valuations really quickly and do the financial ratio analysis. And then what you will do is the rest of the research. But we'll get through the valuations. Okay. So what we're going to need is we are going to need the earnings per share basic, and Sarah's going to show you how to get it. So load up your computers and go to the library and go to Merge It. What is it? Databases?
Research guides.
Research guides?
Yeah.
So is this the home page?
Yeah.
Okay,
So
cool.
go to the library homepage and then we're gonna go down to research guides.
Okay.
Okay, so hello everybody.
Hello.
So I'm gonna show you some of the resources that you'll be using that you've seen are probably cited in these reports, and also that I'm all about efficiency and effectiveness and all that kind of good stuff. So the main thing is, oh yes, more chocolate. I will do teaching for chocolate. So we'll go to the research guides and then I'll show you where to go from there. There isn't a specific finance page, but if you go to the subject guide or the research guide for business administration, you'll see all the stuff you need to go from there. So these are all the things we subscribe to. Mostly, they're very professional sources, so they're the same kind of data feed you'll be getting if you work in finance at all. They have sometimes different names because we have the academic versions and they have different names for other things. But we're going to start with the company information section, and then we're going to move down to the investment one from there. But first one, Mergent. This is your big one. This is such a good one-stop shop for a lot of the data that you need that actually some of the professors don't like the graduate business students to use it because it's too easy. They want to see them go back and find all that data on their own. Mergent Online really packages it and makes it easy for you. So all the stuff and almost all the stuff in one place. So this works from on and off campus. If you're off campus, you'll have to log in with your St. Mary's username and password. Whatever companies you're looking up or whatever banks you're going to be looking up, whatever is in the peer group, you want to know their ticker. You can search by name, but it's a lot easier to search by ticker. So actually, I don't know the JP Morgan Chase one, so we'll see an example. See, I typed in JP Morgan, it doesn't come up. So, just try JP Morgan Chase. See, there's no space. JPM, I did one of your researches for you. There's the ticker for JP Morgan Chase. My bank, for good or bad. Although I'm really happy they're building one in Moraga. So yes, no more out of network fees for ATM withdrawals. Okay, so here you go. Here is a homepage of stuff about the company. I heard you ask if you can use Wikipedia for stuff. If you need background information, this is going to have you covered too. So here's stuff, business summary. You can see the list of executives. You can see pretty much everything you need to know. This is updated constantly. So this is, if this CEO is fired tomorrow, it'll be blank. They'll take him down, James down. They update constantly. They're on the East Coast, so sometimes a little delayed after market closes. You can see also highlights of the business and the history of the business. So it's going to give you some highlights of finances, but also where did the bank start? So be very slow, but it'll give you that as well.
What's that history?
The history is not opening where it's thinking slow.
Yeah, where are you now?
This is under, I just looked up JP Morgan Chase and it's under the company details.
Oh, okay, so there's some of your financial ratios right there.
Right there. That's the current ones. I don't know
So
why
you're
it's
gonna
doing
need
this
those.
slow. So yeah, that's there. The big thing you'll want to focus on. Why are you going slow? After I say it's slow on aftermarkets. Really what we're going to focus on here is the company financials tab. Eventually this will open. There we go. So here you go. Here's your company financials. I can never remember what is in a balance sheet versus an income statement. So what I do is from that drop down menu, do all sections. You can also choose how far you want to go back. So bank like this, which is pretty old, you can do all years available and it'll be very old. Wells Fargo goes back all the way to its inception. Or you can just pick, last 5 years. That's what the default is. And then refresh. And here is this long scrolly bit of data. You can look up EPS. It gives you right now up here, this top part is like the quick summary. So this is what it is right now. That is the basic, there's the diluted, but you can see the history of it if we do more. I think we have to look up earnings per share. Earnings per share. It's in there somewhere. So you'd have to look for it, but it's in here. Here's all the stuffs. Right
So
there.
let's get the, can you go back as far as you can for earnings per share basic.
Refresh, all years available, so you'll see it goes back to 1982.
Okay, that's perfect. That's how far we want to go back.
Okay. And earnings.
And you guys are going to be feeding the EPS, okay, so that we can put them on the board and we can calculate the percentage changes. Ideally, you would export it into an Excel spreadsheet and give me annual earnings per share growth rates.
It's in here somewhere. You got to dig through and find it.
I thought it was in financial ratios or
I
something.
thought it was too, but there's income per
I
share.
thought it was at the bottom.
Yeah. Because we know it's in there.
No, I don't want retained earnings. I want earnings per share, basic. Yeah, I think it's in ratios, isn't it?
Standardized?
Or analysis.
It's in a weird spot.
It is a weird spot.
We discovered that last time.
Yeah, it's analysis.
Yeah, so
To the
go into
analysis.
analysis.
Yeah, there it is.
Okay, and now let's go back as far as we can.
So that should, actually it only makes it go back that far,
No, I need the EPS,
further back.
yeah, I need history.
It's not showing the history.
There's a way to do it.
Yeah, we did this last
I
time.
don't think it's, I don't
We do
think it's
this
an
each time.
analysis. I think it's it might be an income statement.
Income statement there, but it doesn't go any further back
Is
than
it
the
because
5
you
years.
have to set the time frame further back? Because we only picked up to the last 5 years.
Hold on.
In this one,
Oh,
oh, yes, maybe that's it.
Yeah, do it, now do it,
Let's try it that way. No, it's still only doing the 5.
yeah.
I'll
So
figure
go
this
back,
out.
go back to the income statement.
Because we had this problem before.
Yeah, I can never find it.
So income statement, all years available.
Okay. Now, earnings per share basic, it's in there.
Are you talking about net income per share?
No, earnings.
Yeah, because it shows it up there and it doesn't show it in here.
Because it usually gives you the basic and it gives you
Mhm.
diluted.
Earnings, dividends on distribution earnings.
See if you guys can find it.
Yeah, see if you can find it. Outsmart the librarian.
Is it in reports?
No, that's just gonna be the raw
Oh, that's, okay.
filings.
And try ratios.
This is where we get the those. Oh, here we go. Per share cash flow.
No, I want
Not either.
EPS. How about standardized?
That's the one I was just in.
And it should be at the bottom. Oh, you're in the balance sheet.
Oh, yeah.
You got it, yeah.
There we go.
There we go.
Ha
So it's in,
ha. Every year, I should write this down.
I know, it's, so where is it? In
Okay,
company
so it's
financials?
under, instead of the as reported, that's where you get the full list of everything. If you go over to standardized income statement, because when I first went over to standardized, it was.
And let's see how far back it goes. Does it go back to 82?
Should, yeah, 1982.
Okay, that's where we're gonna go.
There we go.
So maybe one of you can you show them how to export it so that they can calculate the annual changes?
Okay, so this is it, right? Yeah.
Why would I want to calculate annual changes in earnings per share over time? What?
Growth?
What? Yeah, I want to be able to predict the future. Can I predict the future from the past?
No. Oh, yeah.
Yeah.
Yeah, are we in a recession? No. Are we in the growth phase right after the recession?
Kind
When was the recession?
We're coming towards the end of it.
10 years ago. So are we in the period right after the recession?
No,
Are we in the growth phase, growth peak phase of the business cycle?
kind of, like it's like at the top.
Yeah, but are we in the decline phase?
No.
Are we in the recession?
No,
Are we in the immediate growth phase?
no,
Are we in the growth phase, peak phase?
no.
Well, there's only
There's
so many, it can't be all no's, right? So we're in the growth peak phase. So can I go back and look at the growth peak phases of the prior, last recession in 08, 09, the early 2000 recession, the early 90s recession, the early 80s? So I basically have 4 time periods that I can basically go back and look at what growth rates were during those growth peak phases. And if we're in the growth peak phase now, can't we use the historical growth of earnings per share in the growth peak phases in the prior cycles to predict where we're gonna go in the future? Yeah, totally. Okay,
So there is a little button up here for download. So that will download this entire sheet, which will be quite handy. There it is. So you can just see, there it is, there are the years, and you can just delete anything else you don't need and just have those numbers there.
and then you're gonna come up with the growth rate for 2019 to get 2020. And then you're gonna do it a few more times with the DCF, okay?
So if you need to
This is
switch,
more of a- This is more of a a macro approach to forecasting EPS as opposed to a micro view where I'm actually digging into the cash flow statement and the income statement. We don't have time to do that. That's a whole other class. But we can use correlation, right? Earnings per share correlation to GDP or the business cycle to get a good enough estimate of what, earnings growth per share is going to be for the next 6 years. And we'll be close enough.
Once you get to this page, since we know where it was, remember it was under company financials, and we went over to standardized and switched it to income statement. If we change companies, so we wanted to look up how is it compared to Bank of America, it'll go to that same page and show you the same data for Bank of America. So you just have to watch up in the corner to be sure which company you're on.
So how do you load all of the companies so that you can toggle back and forth through the spreadsheet? The interface.
Once you search for one company and you click on Add to Company Analysis list, which no one ever sees, it's up in that little corner just with a little plus sign. It will add it to a list, and then you can go back to switch your company and do the same thing. You just want to get a whole list.
Yeah, so you want to add JP Morgan, B of A, Wells Fargo, Citigroup, and Goldman Sachs. So you
Go
have
up
all
to
of
that
them.
one. Goldman Sachs.
GS.
Again, which one?
That one.
That one.
Yep.
GS.
Yep.
Add it to your company analysis list. And then you can go back right at the beginning, up into where it says My Merchant Tools. This is why we never use this part, because it's always hidden.
Can we add those? Because we're going to do something fancy schmancy.
You want me to add the
Yeah.
Wells Fargo?
Yeah,
That's
JP
good.
Morgan, Bank of America, so that should be BAC.
Yeah.
Wells Fargo, Citigroup,
Oops, Citigroup, I didn't do that one yet. Citigroup Bank Corp? Or
no, that's, it says,
Citigroup Inc.
yeah, that's it,
Their ticker is C, that's a good one too.
yeah. And then Goldman Sachs, we have
Okay.
GS. So can we look at what the list is?
So My Merchant Tools, here
Okay,
we go.
so we need 5, so we're missing one.
Oh, and this Citigroup.
How do you add to it? How do you add one?
If you go to that one, so let's add Citigroup. C. Inc. Once you go to it and you're in that record, add that little plus sign. It'll add it to the list.
Oh,
Then My Merchant Tools, there they are. There's 5. So we can use the little double arrow to put all of them over there, and that's the companies we want. Actually, we want to go to the company comparison report. So it defaults to this little guy over here, multiple company report. Go to the company comparison report, and then you can do it from there. Then you would just choose whatever your
So let's kind of go through it a
the
little
data
bit.
points you want.
So let's go through company information. Okay, and then, is there anything in there that we want?
It's automatically going to give you the name.
I don't think so, so,
Yeah, that's pretty basic stuff.
yeah.
And then these are the financials, and then these.
Oh,
are
we
the
do need total assets.
Total
Oh.
assets. Oops, I just saw that. There we go. Total assets, point.
Okay,
And anything else you need?
let's go down and see what else we got. We want gross margin,
Margin,
we want interest coverage,
point.
long-term debt to equity, operating margin, revenues per employee, NOA, ROA, ROE, let's take ROI, let's take total asset turnover, and total debt to equity. Just, some financials.
Yeah.
And then, can we get all of them?
We can get back to 1999.
I'll take it.
All right, here we go. Then we just select our format, Excel, and then create the report.
You guys all should be doing this.
Ta-da! Oops. That's just because these little guys are too short.
Yeah, that's a lot. We really didn't need total assets for all of them, but that's okay.
There you go.
Okay, do those look right? Bank of America, 2.4 trillion, Citigroup, 1.9 trillion, Goldman, 900 billion, JP Morgan, 2.6 trillion, and Wells Fargo, 1.9 trillion. That's right. Pretty amazing, isn't it? How big these guys are.
That's a whole lot of money.
That's a lot of money.
That's a lot.
Okay, and then what's on the other side? Where's all my financial ratios?
They're down here. They're all the way over.
Oh, they're over there.
So if it doesn't have data for it, it'll have just a dash, but.
Yeah, we
here's the
don't need
rest.
all of it. We just need recent
So there's,
stuff.
there's,
But you may want to look at the trend, the trends.
that gives you all your data in one spot.
Okay, cool. So did you guys all do that? So you have it?
What is it under when it says select data items? What?
Are you doing that? Because you're not going to go back and do this
Yeah,
again.
have the list. For the.
Yeah, you guys want to be doing this stuff. I'm saving
What do
you
you press
like
plus for
a
on
lot of-
select data
a
items?
lot of pain here.
So, again, go to the company comparison report, not the multiple company report. You can do that, but it exports in a weird format. If you use the double arrows, it puts all the companies over there, and then you can choose from the financials or the ratios what data you want. So like if you want the gross margin percentage, highlight it, and then click the little arrow and it goes over. You can just
What,
through
is
any
there
of
any
those.
other stuff that we can add in there too? Or?
Not in the quick reports.
Oh, is this it?
Yeah, this is it for the quick reports.
Can you go back?
We can add in, you can make your own spreadsheets.
No, I just want to see what's available in the quick reports.
Oh, it was on the wrong tab.
That was the quick reports. The. when
Yeah,
you
I just
make
want,
the analysis-
I just want to double check and see if we're getting all the information. Oh, I see.
the-
Got it.
These financials.
Okay, so that's the only thing that's available for export.
Yeah, if
for
we
the
wanna
peer
do
group.
it this way.
That's the way we want to do it.
Yeah, so if you wanna do it that way, these are the only things you can do. If there's more data you want, you can, put in your own column and go get it in the full report. But this is what.
This
most-
is plenty
it's
for us.
Usually plenty.
Yep.
Yeah.
Which one did you say you wanted gross margin?
I just wanted all of this.
Oh.
So we can go through them again if you want to. So they want to go through it again. So I want total assets.
Total assets,
Okay, and then go down. I want, I'll take the current ratio.
current ratio,
I'll take earnings before tax margin, EBITDA margin, gross margin, interest coverage.
highlighted.
I'll take inventory turnover, loan to deposits. Okay, we're not gonna use all of these, but I figured let's
Might
take
as well
them.
get them all.
Yeah, long-term debt to equity.
Equity.
I don't know what the difference between those two, LT debt to equity and long-term debt to equity. Why don't you give us both of those just in case?
Okay, we got
Okay.
loans to deposit, long-term debt equity,
And interest margin, percentage,
interest margin percentage,
okay, net profit margin percentage,
net profit margin.
that's the one right there. Operating margin,
Operating margin,
revenue per employee,
revenue per employee,
ROA,
the Rs, all
yes
three Rs,
please, yeah.
all three Rs,
And is that it?
and then.
Total asset turnover and total debt to equity.
Great.
Okay. Because what we'll do is we'll go through the financial ratios and we'll pick the best ones.
So just to, I'm sorry.
Go ahead.
So just to confirm, we need the total assets, the gross margin percentage, interest coverage.
Well, she's got it right there, so we can go through the list. So go back up, Sarah, and let's just go through it.
So the whole list?
We don't need to go, but just your list on the right, so
Okay.
they just want to make sure they got.
Yeah, so
The
total
right ratio.
assets,
Oh,
current current ratio, earnings before tax margin, EBITDA margin, gross margin, interest coverage, inventory turnover, loans to deposits, long-term debt equity, net interest margin, net profit margin, operating margin, revenue per employee, the 3 R's, the ROA, ROE, ROI, total asset turnover, and total debt equity. So that's what we selected.
I think those are the most important financial ratios you can want. And what we can do is we'll be able to pick some of the financial ratios in your financial ratio table. Some of them are pretty good, but we could probably do better. You know, in picking some of the more relevant financial ratios. Yeah.
Do you highlight all 5? Sorry.
If you do the first 3, not then.
Yeah, I scrolled up.
Would it be better to do years down or years across?
It depends. This one that we just opened was years across, so you can see it goes that way, and it's a really long spreadsheet.
That's probably the way you want to do it, because if you're going to be
It seems to be the standard
calculating
that it goes
means
that
and
way.
medians and percentage changes off the, we calculated the earnings per share was separate, right?
Yeah,
That was a separate.
yeah,
Earnings per share is not available in here.
not in the quick reports. We'd have to go and find it for each of the companies.
Go ahead.
Did you highlight all 5 of the top company listings, or did you just do 1?
Yeah.
I did, actually, I don't know what I did in that one. Let's just move them all over and create the report again. Oops. So we should get one,
And make sure you go all the way to,
oh yeah, I
history.
just did the 1 year there. So each row will be a different bank, and each column will be a different year and ratio.
you probably want to do it,
How did you?
I would basically do it 2 ways. One, with the current 2018 ratios as one, and then do history.
Okay.
So you can see trend.
This is a good question for you. It asks include average,
Yes,
so you can include the average,
yeah.
especially if you're gonna do the history.
How did you include all of them? Just highlight it all.
If you click on the first one and then you scroll down and hit control, and then click on the last one. Or, no, sorry, shift.
So I would do 2018 separate, and then do one more with the history.
17, so if you highlight the first one, hit shift and highlight the last one, you'll get all of them. If you wanna individually one out of the list, you can do the control instead of shift. There you go, Excel format, create report, will open, and you can play around with your spreadsheet. So if their numbers are so big, you gotta make the columns bigger. There you go.
Okay, is everybody saving these? Because we're gonna need these on Wednesday.
Lot of numbers.
Okay, so we got the ratios, we got the earnings per share.
And did you see here? When I clicked on include average, it averaged it for this peer group. So these 5, it already calculated the average, which you could do on your own with a, Excel formula, but they included that. That's what that.
We're
that
gonna
number
do
is.
ours a little different.
So that's what that number is.
So is everybody saving down the Excel spreadsheets? Because I'm gonna ask you for data on Wednesday.
You're ready to shout it out. So for this class, will they need the other resources, or is Merchant gonna be?
No, I wanna do the others too. I
Okay.
want them to see
Okay.
what's going on.
Okay, so there are others, and for that, we'll go down to the investment and stock market information section. So Merchant's like the #1 go-to. Everything that's been put into an Edgar filing all the different filings they have to do has been pulled out, put into Merchant. On the investment and stock market information, these 3 are more analysis. So they have the same data, but they also have analysis. So the #1 go-to one on that one, the other M, Morningstar, in lieu of having things like a Bloomberg terminal, this is what we have. Again, you can't make, this is again the academic version, so we can't do it all there and then export it. We have to do it one company at a time, but we can still do it. So, you know, Bank of America, there it is. Know your tickers. And everything is slow today. There we go. So, this morning we got to see it actually move, but now obviously the market's closed, so everything's kind of frozen right now. But it'll give you, you know, ticker information, but it'll also give you this analysis. So you get to see how other people, this is what you're doing, making an analysis, and this is, you know, what someone else has done. It's got these charts, which is handy. What did we see this morning that was awesome? We saw something this morning that was the operating performance.
We were looking at
analysis. Oh, that's right. And because we saw the projections.
Yeah, there was some guidance.
Yeah, so they had some of those. Some will have it, some won't.
Can you go down a little bit and look at the, where it says, I don't want to see full report, I want to see the archive.
The archive.
It's above. Okay, keep going. I want to see view report archive.
Oh, view report archive.
Yeah, because this is going to give you some idea of what's been going on.
You'll see there are very many pages. So at least it does the last few years or so. It's not going to be a super archive because, again, this is the academic version. But you'll see these are different times that this company has been mentioned in some kind of professional analyst. It's usually going to be things like, is it time to buy big banks? Slow improvements continue. Banks look under reserved for energy costs.
The one thing we don't have in this report is an industry. Oh, industry.
We have that.
Do you have industry financial ratios that match up to the individual companies?
We do, possibly. Let's go to industry information. And IBIS World.
Well, let's do
We'll check that.
Morningstar first and then go do
Yeah.
the industry stuff.
So this is really good. They also have company financials up here. So again, play with the tabs up here.
Do they give you pictures of the executives? it says
They
exec.
might. I know Emergent does.
Oh, they do? So when you click on them, they'll give you the pictures?
Yeah, Emergent does. This just gives them their total compensation and usually a short biography.
See a picture, I see a live thing.
Yeah, in Emergent, you'll usually get a picture. See how old they are, usually how long they've been there, and what they own. When they've gotten shares, when they've gotten rid of shares. It's good to be the chief financial officer, but then everyone knows everything about you.
Okay, so let's go back.
Oops.
I want to see what other data it has. And we're going to be looking at JP Morgan.
Okay. JP, right. Switch to JPM. If you do get an error message where it says, you know, can't load or something, just hit enter again. That seems to be a little buggy sometimes. They made their interface nicer, but still buggy as all get out.
Okay, so
There's more key ratios there.
So they got the PE ratio. Did I see that?
Possibly full key ratios data. Here we go. There's all of them, and it goes back a few years. All right, is this
Yeah.
month by month? Oh no, it's by year.
Yeah, it's here.
We got cash flow, financial health, efficiency ratios, all kinds of stuff.
Okay.
Payout ratio.
Okay. What else? What else do we got?
What else do we got?
Can we go back to that main page
Mm-hmm.
and then go down? I want to see what's on here. Oh wait, go up. So banks, diversified. Oh, so they do give you.
This will be some of the industry.
Okay, that's good. Because industry is really hard to find. Okay, go down. Keep going. Go
and the executives. That should be it.
Okay, and let's go back up. And is that the, oh, so that's it?
That's it, that's the whole thing.
Okay, so that's the whole thing. Okay,
That's the whole
perfect.
thing. Yeah, these go to that section.
Got it, okay. And then let's look at S&P, net advantage, and then value line.
So net advantage is also under the industry, or among Roma. It's also on the investment and stock market. There it is. So this one is kind of a mix between the two different sources. You can look up again your company. JP Morgan Chase. Again, good to know the ticker. Same kind of stuff, just a little less pretty. We'll have the same data, hopefully the data matches, because it is, again, as reported, so that's hopefully what it is. Sometimes they'll have different ratios depending on which company wants to do the analysis and the computing for you. But there's what they've put on. They'll usually have further back dates. So this one goes back to 2014, so that's a little bit longer than the other.
We're gonna need to also, please take a note, we're also gonna need to take a look at fixed income. And can you show me the, yeah, go down a little bit more. Keep going. Can I see what the, go up a little bit? A little bit more.
Oh, fixed income, there it is.
Yeah, so let's look at the summary. I might want to look at fixed income. Is that it?
No, it's coming.
Oh, it's coming.
Nice. The interwebs is slow. It's thinking.
Please take note, you're gonna, in the fixed income, you're gonna want to try to find the yield to maturity on bonds with a maturity of between 7 and 10 years to get an approximate cost of the debt. Is it running?
It's thinking.
Is it?
Everything seems to be slow today. And the Wi-Fi's weird. Come on. Other, come on.
Okay, is there anything in here that shows yield to maturity?
The bonds are hard.
What is that right there? Benchmark securities 5 and 10 year.
What about maturity date?
Now I'm looking for a yield to maturity or an interest rate. It might be in security summary.
Give it a check. Yeah, those are, I know Morningstar took them out.
Oh, there's the coupon right there.
Which one?
I'm looking for anything on the coupon. It says, but they're all 0.
This is Susan. My account was booted out or something. It just says that it's been logged into from another location and I don't.
Isn't
have
there a limit
access
on
to
these?
any of this.
On
Net
S&P?
advantage?
Yeah, really? You got it? Okay. 'Cause
So it kicked you out too?
Yeah, I don't have access to any of this.
Yeah, let's go back to the
That could
summary.
be possible with net advantage. It should not be.
You might be able to Google,
I
you
will
might be able
call
to
them tomorrow.
Google JP Morgan 10-year, 10-year bonds or something like that. See if you can get what the yield to maturity was at issue or where it's yielding right now, yield to maturity. Because that'll give us an estimated cost of the debt.
Yeah, as soon as, when you said that, I had a feeling, because when I went to type in here, I saw other people's searches.
Oh,
They
really?
messed us up. They put us on a single user, so I gotta call them tomorrow.
Thank you.
Yeah, they're the only ones, they mess that up sometimes. The only one we have a limited access to is the other one I'll show you. So don't follow along on this one, is Value Line. So we only have 3 seats at a time. And we haven't run into too much of a problem because everyone does their homework at different times. Don't do it the night before because you're gonna run into problems with that. Yeah, so we have a limited seat for this one. This one is good because it does go, it does have more, future. The other ones don't go too far in the future. This one takes a risk and goes in the
So
future,
let's look at JP Morgan.
but don't follow along. As it thinks. I don't know what gremlins are in the system today, but whew, it has been slow all day. So these are a different set of analysts, and then we've got the target price range up here.
You
for
guys are
18
gonna
month,
need to collect,
3 to 5 year target
long,
pricing.
the value of long-term debt and owner's equity, because we're gonna need to calculate the weights for the weighted average cost of capital.
Long-term debt, there you go.
So where's the reports, or is this just it?
This is kind of it.
Is it? Okay.
It's not the greatest.
So what does it have that we need? There's a dividend yield right there, which is, could be useful.
It has, well, we've discovered last time, it has the earnings predictability, which I think is their own, which you can
Well, that could help.
compare growth, book value, technical rating, and is it these guys? Yeah. So if we go down to the old reports, we can go further back into the, because usually they say the last 3 years, but they archive, so if you go back 5 years, and they go back 3 years, then you have 8 years. So sometimes you can get older. If you can't get it anywhere else, you'll be able to get older from a value line. So they go back here, and then you'll see 3 years from that date.
Okay, so we got Mergent, we got Morningstar, we got S&P Net Advantage, and we got Value Line.
Yeah,
Okay,
those are your big ones. Those are your big 4.
so that'll be helpful for the subject company and then the peer group. So
Oh,
how
let's
about,
check industry really
yeah, let's do
quickly.
industry.
IBIS World is the one that has it, so if we do commercial banking, and we go to its most recent one, the key statistics,
Yeah, we might want to add a industry slide
yeah,
in the presentation.
and then there's industry data. So this is for the banking industry, and you can compare the revenue and all that kind of
Yeah,
stuff.
we're gonna want to see financial ratios if you have
They
them.
are down here. The industry financial ratios.
Okay, cool.
These
So
are
that's where
the
that's what you're gonna use
RNA
to,
stats.
and you're gonna use the large. You're gonna use large.
These are large banks.
Yep.
These are what their ratios are.
Now, does S&P still do industry reports? Or are you just using
They're-
IBIS?
They're limited. They would be good for banking, so once you can get back into these, you can look for the, let's see, or once we get to one, you should be able to see an industry survey. So the banking one is pretty good. The rest of the industries,
Yeah.
questionable.
Okay, so you probably wanna look at the, what I would do is do a Dropbox or something and start putting the files in there. I don't mind if you share it.
Yeah, IBIS World is kind of taken over, at least in the practical side of the industry reports.
Yeah, doesn't Mergent provide industry ratios?
Limited. There's some, but it's usually more international. So if we click on.
So they wouldn't have them for banking?
No.
Oh, really?
Not that would be useful for your class. They're
So really just IBIS if they have it?
IBIS, if they have
Okay.
it, that's the best recommendation.
All right. Okay, I think that's it.
So get to know this page well. The company information tab is where you'll get Mergent, investment and stocks where you get the other ones. And then industry for IBIS World, you can get the industry. As far as I know, that's the only place you'll be able to get the RMA stats now.
Okay. And if you can't find the industry ratios, we'll just make something up.
They'll be there. Okay, any questions? That was a lot of like throwing data at you. Give yourself some time. Happy hunting. If
Well,
one
we should have
place doesn't
downloaded
have
all
it,
the data that we need for Wednesday.
I know, while we were at it, but now you know how to get it. Once I click out of Net Advantage, one of you should be able to get into it, but I will call them tomorrow and yell at them nicely to fix that.
Okay, so you guys have the earnings per share, so I can do the calculations and the financial ratios. I can do that too. And then the other stuff you can get on your own. All right, I think that's it. And you're coming back?
Yes,
All right,
6:30?
yeah,
Okay,
yeah.
see you then.
All right,
All right, thank you.
take a break.
Happy